What we have seen so far in today's market is going to change a lot of large investors, institutional investors, and retail investors' opinions on where this market is likely to head moving forward. Now, while there still are risks, especially with these container shipment slowdowns and the volatile nature of these trade talks, the overall macroeconomic data here is doing everything that we are expecting it to do here. We're also going to talk about some of your favorite stocks in this video here: Palantir, SoFi, Hims, Neo, Tesla, and the overall market, ladies and gentlemen. So before we get into all of that information, if you guys do enjoy the information and analysis I provide for you guys in these videos here, make sure you go down and hit that like button. It costs you nothing to do it, but it helps me out a whole lot in spreading this information out to as many people who actually want to learn. And again, if you never want to miss another video like this, make sure you guys are subscribed, turn on notifications so you're notified every time these videos do end up getting posted live here. So let's get right into some of this data, start breaking it down. So earlier this morning, we saw PCE inflation data get released here. So this is the Fed's preferred metric of inflation, and we can see core, which is going to exclude the volatile food and energy categories, is dropping off a cliff. We saw in February, PCE readings came in at about 3%, and for the March reading that we just saw released today, we came in at 2.6%. Remember, there are so many economists out there, and also some of these economists are at the Federal Reserve, and inflation is their main focus here. We've heard it from Jerome Powell and the Fed so many times that they are much less focused on the growth slowdown and the potential risk to unemployment moving to the upside. They are much more focused and really kind of operating with some tunnel vision here, in paying close attention to the inflation data, and seeing this PCE print at 2.6% here is definitely a solid thing for markets going forward, which is why we are seeing this intraday bounce that we have witnessed so far. Then when we come over here and take a look at headline, we are seeing a very similar picture here. Again, 2.7% in February, now 2.3%. Now, in addition, today, we also saw GDP come out. Now, this is the first quarter that we have seen one of these negative GDP prints here. The last time that we saw this was in 2022. Remember, the Atlanta Fed's GDP estimate for the first quarter was very, very, very low. The estimate of what the GDP growth, what it was going to be in the first quarter of 2025 here was about 0.3%. We came in at negative 0.3%. Now, you might hear some talks about a recession. Now, some of this growth slowdown is definitely going to be the result of this new trade policy here, but what you also have to keep in mind is that the Federal Reserve right now has really been kind of cautiously hawkish here in a lot of their statements and tone, and again, really focusing in on inflation and much less so this growth slowdown that we have been witnessing. So what do we have here so far? Well, we have confirmation of this growth slowdown that many people correctly were expecting to happen, but we haven't necessarily seen that significant increase to inflation that not only the consumers, but also these leading economists are expecting to happen here. Again, when we come over and take a look at these Michigan one-year inflation expectations by political party affiliation, you can see that on average, when you average out all of the submissions to this survey, again, people think that inflation is going to jump to 6.5% this year, which is just absolutely unrealistic. You see the Republicans at 0.4%, again, unrealistic. The Democrats at 8%, and the Independents right around 6.5% here. Now, what is also interesting and something that I want to point out is personal spending rates and personal income rates are moving up a little bit here too. And when you look at consumer sentiment here, in that it is completely collapsing down to these 2022 levels here, you would typically expect to see people holding on to a little bit more of this discretionary income and not spending it. But when you think about the overall opinions of consumers, if that is matched with inflation expectations being as high as they are, well, they would much rather purchase those goods and services in the present versus just waiting for those goods and services to increase like they think they will later on this year. Now, what does all of this mean? We have growth slowing down, we have inflation remaining at the levels that they were previously, or actually even moving to the downside, and we know, especially from that ADP report this morning, that again, there are significant risks to the upside with unemployment right now. Well, it means that the Federal Reserve is most likely behind the curve right now, and that could lead to more rate cuts this year than what the market currently expects. And that's exactly what we are witnessing on the Fed Watch tool right now. If you look at the projections going into the end of the year, a week ago, we were pricing in about a 30% probability of 425 basis point rate cuts going into the end of 2025. And now that probability is sitting at 41.9%. So the people that are putting their money where their mouth is are sitting on the side of the thesis that inflation is not going to significantly move to the upside. Growth could easily stay a little bit lower here. The risks to unemployment are to the upside, and what the Federal Reserve will need to do is cut rates by more than what the market was previously expecting going into the end of this year, which could set us up for a very, very strong backdrop for stocks to rally. Again, there's a lot of other macroeconomic factors here, but when just taking a look at these factors as a whole, declining interest rates could easily add some more liquidity to the system, and that could flow back into the stock market. And that is exactly why we have witnessed so far today this significant intraday reversal after we saw that negative GDP print this morning and the negative reaction to the ADP payroll report. Now, again, just looking at this chart here, all we did was trade back down into these zones that I outlined for all of the Less Trades, More Profits community members. Remember, guys, if you guys want to hop in there and get access to all of the educational curriculum videos, the private daily live streams, the macro research reports, single stock research reports, the full list of stocks and cryptos that are about to explode before they do, the pre-market plans, make sure you guys check out that link down below. Use code TRADE for 30% off your first month. But again, this is a very, very strong side moving forward. And again, when we go into Friday now with NFP, the non-farm payroll report, and we get a better insight into the labor market, after already seeing this decent PCE report, if we do end up seeing that increase to unemployment that a lot of people are expecting, we could easily see the market react positively on that negative news because the market's going to start pricing in more cuts. Now, let's start talking about Palantir a little bit here. Now, again, this one has been an absolute monster over the last few weeks here. That short-term target that I outlined for you guys heading up to that 110 area here has been absolutely blown through, but right now we are seeing that kind of next phase here as we head into earnings, a little bit of consolidation, letting the moving averages catch up before earnings on Monday, May 5th here. I'm going to have a video kind of overviewing and previewing Palantir's earnings over the next couple of days here. So again, make sure that you guys are subscribed if you are interested in learning a little bit more about what to expect on Palantir coming in the near future. We also have a new partnership today. Again, Nautilus and Palantir announced strategic partnership to accelerate the production of sustainable commercial aircraft. Nautilus, an aerospace manufacturer of blended wing body aircraft, today announced a strategic partnership with Palantir to advance the production of their aircraft. Through the collaboration, Nautilus and Palantir are deploying an AI-based operating system to accelerate the development of innovative approaches to design, engineering, manufacturing, and streamline Nautilus's operations and strengthen its supply chain. Again, very, very solid work from Palantir here, expanding their business, especially in an uncertain market environment. Now let's move on and talk a little bit about SoFi here. I know a lot of you guys are probably pretty disappointed in the last kind of 18 hours here of performance out of this name here, even after an absolutely awesome earnings report. And again, some of the fears around SoFi today, when we move over and take a look at this here, SoFi down 5% on fears of how a recession affects their credit performance. Meanwhile, here's what their CEO literally said yesterday. Our credit performance has remained really strong. We look at entry rates, we look at 90-day delinquencies, and obviously we look at NCLs, all of which have continued to improve and remain very steady. I'd say the American consumer is actually doing quite well, and we haven't seen signs that cause us to get a bit concerned. We're 100% willing and able to change on a dime if we need to, but so far, no issues. Think about what we just talked about a little bit earlier in this video here, where consumer sentiment is really low, but personal spending rates are actually up. These types of purchasing behaviors from the consumers haven't necessarily changed yet, and again, with inflation expectations valuations elevated the way that they are, even those individuals and consumers that are feeling a little bit more worried and not going out into the open market and spending right now, could easily see some of these new positive economic developments, such as more rate cuts coming in the near future, which again would help SoFi here, could easily boost their spending behaviors up. And again, SoFi, all we really did today was came back down, touch this daily, or come really close to this daily 200 exponential moving average here. Again, for me personally, I own this one at $6.55. At these levels down here, I would actually consider buying a little bit more. But again, it's your money. You can do whatever you want with it. I do think this is a pretty solid risk reward area to add to a SoFi position, or maybe even initiate one if you guys do not have one already. But again, none of this is financial advice. You guys can do it all, whatever you want with your money, and I am not your mothers. Now let's talk a little bit about HIMS too before we get into some electric vehicle names here, NIO and Tesla. Again, moving over to this chart here, something that I was saying a lot to any of the members of my private trading community or my private investing community, VIX Insights there, which again, it's only $10 a month if you guys want to hop into that tier there. But again, that type of gap up that we saw off of the Novo Nordisk and HIMS partnership news was absolutely unsustainable. Those are the types of gap ups that you want to sell and not buy, and we can see exactly what is happening after that news came out in that first sell-off that we saw yesterday there. Again, guys, be very, very careful out in the market these days of chasing these very, very significant moves. Again, I know I say it a lot. It is better to be late than wrong, but that really just relates to the broad market and not chasing aggressive gap ups when a stock really does not deserve to be up 30-40% off of some decent news, but not earth-shattering, groundbreaking news that is released. This is still a very, very solid name moving forward here, but what I would like to see again is a little bit of a pullback. Make sure that these EMAs start to catch up to price action, see price respect those levels there, and see what happens as we get into HIMS earnings coming up on Monday here. Now, shifting gears to the electric vehicle space, NIO actually had some very, very solid news come out this week. We saw NIO's weekly registrations in China starting to move to the upside here, which is a very, very solid development. The NIO and Onvo brands had combined insurance registrations of 7,970 units in China last week, up 29.17% from 6,170 units the previous week there. So again, as you can see by this chart, very, very strong positive momentum here with NIO and these weekly registration numbers. Now, again, it's not necessarily being reflected on the chart right now, but again, you got to think about the short-term move that NIO has made after this breakout here, being up about 23% in a matter of days here. It did make sense for NIO to pull back a bit, which I had outlined. Again, let's see if NIO can hold this daily 10 exponential moving average here, consolidate around this area, and potentially get a push up to that 200 EMA up here in red. Again, that is going to be the major decision point. If it does come up here and rejects this area, I could easily see us coming back down and chopping around in this zone that NIO has kind of been hanging out in really kind of over the last year here. Yes, we have seen some significant volatility in this name, so anybody who is trading this one in the short term on these spikes, that is definitely something that you could easily keep doing here. But again, for long-term investors in NIO, remember, everything about this one is going to come down to the results. The executives at NIO have been continuously over-promising and under-delivering over the last few years here. Investors have had enough. They need to see results out of NIO here. And again, they do have those lofty profitability goals by the end of this year and heading into the beginning of next year. But again, lots of talk. We're going to need to see some action. And again, they have taken that action. Those cost-cutting initiatives are definitely going to be helpful in getting them towards those goals there. But again, this one is going to take a little bit of time to play out. I do own this one. I own a decent amount of it, about 4,000 shares at $4.55. So a little bit red on this position here. It is relatively risky, this one here, again, because of the fact that there has been so much over-promising and under-delivering here, but it's not really a big position for me in the grand scheme of things, so I'm perfectly fine with holding this one to see if they can meet those goals and actually deliver going into the end of this year. Now, the last stock I want to talk about with you guys in this video here is Tesla. It's not one that we talk about a lot on this channel here, but is one that the short-term trading community, less trades, more profits, loves to take advantage of when it gives us those amazing opportunities. So moving over here, just kind of taking a look at the chart of Tesla before we kind of recap a little bit of the news that came out over the last 24 hours with this one. Again, Tesla is down about 5.44% here on the day. What I would really love to see out of Tesla here in order to get me very bullish is a break and hold above this 200 exponential moving average, a nice period of consolidation, and if you break to the upside of that range, you could see a very, very significant move up to 366 or 370 there. But again, that first step is breaking above and holding above that 200 EMA here, but that might be a little bit difficult after this news came out here. Waymo and Toyota strike partnership to bring self-driving tech to personal vehicles here. Again, FSD and a lot of the other elements of Tesla's business are something that Tesla investors focus in on a lot here. To me, and for me personally, I think a lot of people overcomplicate Tesla. They love to say it's not a car company, but the vast majority of their revenues are coming from vehicle sales. Again, this is one that is not going anywhere, I don't think, but obviously with the new regulatory environment, with all of the new technology coming out, is definitely going to have some hiccups along the way here. So guys, that is going to wrap up this video here. If you guys did enjoy the information and analysis I provided for you guys in this one, make sure you go down and hit that like button. It costs you nothing to do it, but it helps me out a whole lot in spreading this information out to as many people who actually want to learn. And again, if you never want to miss another video like this, make sure you're subscribed, turn on notifications so you're notified every time these videos do end up getting posted live. So guys, I'll see you in the next one. I'll have another video out for you guys this evening, but until then, peace.